We awake? We awake. We awake. We're awake. Time to start another video. Lesson 2. So let's get into it. Aight. So I'll make my thing a little smaller. Close the Steam and open the Chrome. Alright, first things first, we're doing a lesson starting from 0. So 0, 0, 0, you don't know anything, okay? So we first gotta make a TradingView account. So I'm here on, let's go to a guest. Oh my god, always doing bullshit. So if you go to TradingView, literally just click the first link and make an account, okay? Just do that. Good. I will just go to my own account. Oh, why did I not have to do that? This one. And I will go to my own account of TradingView. And you should come to a screen like this. Now, don't get scared. This is not where you take the trades, okay? You have to go to Products and Super Charts, the one terminal to rule them all. Click on that. Alright, we good, we Gucci, we chillin', we flippin'. Now you get a screen like this. Actually, your screen will probably not look like this. This side will look a bit different, but that's fine. I will teach you the basics of how to use TradingView. Okay, the top bar decides basically what you see on the bottom. Okay? So this search bar is actually very important. It is where you choose what you are going to trade. So there's different categories. There's all, which has all. There's stocks, which is just individual companies. There's funds, which is mainly index funds, but I think there's also some other funds from specific companies. There's futures, which I will explain what futures are. There's forex, which is foreign exchange. And this is like the exchange of currencies, basically, against each other. There's crypto, which is crypto. There is indices, which is indexes. There's bonds, which I don't know exactly. Oh yeah, these are like US bonds and so on. But actually, let's see what this looks like. Yeah, this is what I thought. Okay, these bonds. I don't know what economy is. I don't know what this is. And there's options. Now, out of all of these, which ones should you trade? Well, really, it's up to you. But I will tell you what I trade and why. So I'm not an expert again, but I have my own sort of opinions, preferences, and I'll just go one by one. So what is the problem with stocks? The problem with stocks is that they get influenced by industry-specific data, and they get influenced by the company's internal things, right? So if a company fires a CEO, that will affect the stock price. If a company has bad profits, that will affect the stock price. And there's just too many effects going on at the same time that it's very unpredictable, the stock price of a company, in my opinion, okay? Funds, before I go into this, I trade index funds, which is basically the S&P 500 and NASDAQ. Now the S&P 500 is comprised of 500 of the largest companies in the US. Now I don't know exactly how it's comprised. How S&P structured. There's like the bigger companies are weighted higher. The market cap, exactly. So basically it's done by market cap. There's probably a picture. S&P graph. Not graph. Oh, I don't mean to say that. Divided up. Graph. Okay, it doesn't matter. Doesn't matter. And then I also trade in combination with S&P the Nasdaq. Now the Nasdaq is the 100 largest companies, I'm pretty sure. Nasdaq 100 largest non-financial companies listed on the Nasdaq. Exactly. So it's non-financial, so not like banks and stuff. But yeah, basically that's what I trade. I'll explain why that's good. But now I'll explain why these things are not good. So funds, yeah, that's what I trade, basically index funds. Futures, these are like okay, I'll tell you what futures is. Basically, it is a contract where you are given the obligation. Sorry, you're given the obligation to buy an asset or sell an asset at a certain future date. Now, it sounds simple, but basically you have higher leverage, higher risk, and you are not in control of when you buy or sell because that date is already predetermined when you enter the contract. I don't know how it works on TradingView because there is no like contract. Like you can't choose a contract length on this. But if you were to do futures, that's how you would do it. You would choose a contract length, and then when it expires, you either make money or lose money. Same thing goes for options, but options are a bit different. So like you have a call option and the opposite. I don't know what it's called, and it gives the buyer the right, but not the obligation, to buy or the underlying asset at a predetermined before a predetermined date. Now, okay, again, it doesn't sound very complicated. Basically, just don't do options or futures because these are like, to me, these are high risk, high reward, but they're more like gambling, bro. Gambling unless you really know what you're doing, and they're pretty complicated. So for your minds, I'm not going to make a video on them yet. I'm not going to explain them in this video. Maybe if you really want to know more about them, I'll make a video in the future if I have no more video ideas. But I don't think it's that interesting, and yeah, I'm just not going to talk about them. So I don't trade those. Now the problems with Forex. So I used to trade Forex. You can see they're on my red list. This, by the way, clicking this will add assets to your red list. I don't trade Forex because I don't know why. It's just like I don't see the patterns. I just don't see a pattern in Forex. Things just happen. Like, yeah. I mean, looking back now, I feel like I could have made a trade today here. But like, I think the mistake. Okay, I'll be 100% real, no fake. Okay, I'll be 100% real. The reason why my Forex trading is not good is because I traded in the London session. And it's only good to trade in the opening of the New York session, at least for my strategy. So I kind of gave up on Forex too easily, maybe. That's what I did. But now I just trade S&P and Nasdaq, so yeah. I'll explain why S&P and Nasdaq is good. Basically, here's S&P and Nasdaq. Here you can see it. You can also search it up here. If you search up on all SPX, you have different S&Ps. And now I'll explain to you why there's multiple. So these are different exchanges. So the data will be different. The pricing might be a bit different. And most importantly, the volume or the number of times that the price changes per a certain amount of time will be different. So higher volume is always better. Higher volume is always better because that means that you have more exact price amounts. Like I can show you something that has low volume and something that's high volume. So here you have a version of the SPX, S&P with high volume. So if I go on a really low time frame, you can see here on a 1 minute time frame, that means I'll explain what these time frames mean, but it still looks like a smooth price action, right? But if I go on the same S&P, just a different, this is a different broker, you can see that it's not as smooth. There's jumps and there's cuts, and it's just not a smooth price action. So But on the other hand, in this broker, you have the full 24 hours, while in this one, you only have the New York session. Okay, those are the pros and cons. You can get the full 24 hours and the smooth price action, but you need to pay €7 a month, I think, to buy the data, which I don't do. So I don't think it's necessary, but I think it's useful. Okay, moving on. So we've decided what this bar means. Now we need to explain to you what all of these things mean. So this is basically your choice of a time frame. Each one of these is called a time frame. What is a time frame? Very simple. If you're on the 1 minute time frame, each of these candles represents 1 minute of price movement. So if you see here on the bottom of this line, you have a time and a day. So 20:02. That means this candle opened at the time 20:02. Now, I'll explain to you what candles mean. A green candle is an up candle. A red candle is a down candle. Simple. However, there is these things called wicks. And these things are the things you see on the bottom and on the top of candles. There don't have to be any wicks, like on this candle there is no wicks. On this candle there are no wicks, but generally there will be a wick on a candle, even a tiny one or a big one. Now what do wicks mean? Again, very simple. A wick is the high that the candle made in that minute. So basically, the way you read a candle is, let's see if there's any candles opening soon. This candle closes. You can always see when the candle closes here on the side. 55 seconds. Okay, until then I'll explain something. So when a candle opens and it's a green candle, the opening here is on the base. Then a price develops. So you can see the candle opened here. This 9:08 candle, 21:08 candle. And then price moved down, made this low on this 1 minute, within this minute. Price moved all the way up, made this high all in this 1 minute, and then price moved down and closed here. So the body shows the opening price and the closing price, while the wicks show the low and the high. Simple. On the red candle it's the opposite, because the red candle, it opens higher than it closes. That's why it's a red candle, because overall price moved down. Okay, so now look, in 3 seconds a new candle will open. This candle closed here. You see there's a jump. It doesn't have a smooth movement, even though we are on the high volume S&P. And instantly we had a high made, and now the candle turned. It was green when it was up here, but now it's a red color because it made a low. But now it's green again because it's above its opening price. So depending on whether it's above the opening price or below, it will be a green or red candle. I think that's pretty simple. I'll just draw it out because I don't know, I just feel like it, okay? So we have a candle. Oh, let's make this red, okay? Dude, okay. Okay, we have a red candle, okay? With a wick here and a wick here. That means the next candle will open on this closing price, which is the end of the body. Let's make it a green candle. Let's make it a green candle. So the candle opens on this bottom, and say we make a low. So at some point, this candle is actually red. When it made this low right here with this wick. However, as price developed, the price reached this area, which made the candle a green candle. Okay? And we can also make a high, sure. So now the closing price of this candle is the bottom, the top of this body. The opening price was down here, the top was here. You can know if there is smooth price action or not smooth price action if the bodies line up. So sometimes, for example, here you can see this red candle closed slightly higher than this green candle opened. this green candle closed slightly lower than this green candle opened. And these jumps, this is a big jump, just show that price moved while the candle was closing and while the next candle was opening. But these jumps are only visible on the lower time frames because the price has this set sort of tick rate, or if there's more trades going on, the price will fluctuate more. And so if you go to a higher time frame, like 15 minutes, they almost always line up very well, very cleanly. You can see that this all lines up very nicely. Yes, you will have here and there somewhere lineups where this doesn't happen, but generally it lines up very nicely on higher time frames. Okay, is there anything else I want to say? Yes. So, now that you know how to read candles, tell me what happens in this candle right here. 15:30, 15-minute candle. What happened in this candle just by looking at it? Tell me. Say it out loud. Do it now. Yeah, it's pretty true. No, bro. You said it wrong. You said it wrong. Always saying it wrong. So, the price opened, right? You said that we made a high, then we made a low, and then we closed below. That could be true. We don't know when. We don't know which high was made first, which low was made first. We don't know if this low was first and then the high, or first the high, then the low. But really, it doesn't matter as much as you might think. I'm guessing, using my detective skills, I mean, this is a guess. If I'm wrong, you can laugh at me. I'm guessing that the low was made first, simply because we had a red candle before. But that could be completely wrong. So let's go to the lower time frame and see. I was correct. You can see that the low was made first on this 3:30 candle, and it's within another 5-minute candle. Even though it's a green one, this low was made. So at one point, this candle was completely red. At one point, we had a candle that was red like this. I can't draw it. We had a candle that was red like this. Oh my god. We had a candle that was red like this. Bro. Okay, we had a candle that was red like this. Okay, it was completely red. Bro, I'm actually gonna crash out, bro. Okay. We had a candle that was red like that. Okay, this is getting boring. Now I'll teach you how to scroll, I guess. So with my scroll wheel, I scroll and this zooms out on the x-axis. You can also zoom out by dragging this. You can zoom out on the y-axis by dragging this. If you use control, you zoom out differently from all sides than if you just use the scroll wheel. It's a bit different, which side you're on and so on, you know what I'm saying? This is with control, this is no control, so it's just different types of zooming, I guess. Okay, you can also do this, which is the auto, which fits the data into your thing, which I think is pretty cool. And then when you zoom out, it will automatically make it smaller and bigger depending on where the high is and where the low is. You see, I'm just scrolling on the X, but it's moving it up and down. I think it's pretty cool. You can also do logarithmic. I don't know what the point of that is. Like, what? Just don't do logarithmic. Just either do auto or no. Okay, I don't think I have much more to say. This video is getting boring. 20-minute video already, bro. I've talked about nothing. Okay, I'll talk about one more thing so we can get this video out the way. If we have a candle with a large wick, either to the downside or to the upside, it can often mean that the next candle will either be red or green. Now, how can you tell? I mean, it's pretty simple. If the candle has a big wick to the downside, that means that the next candle will probably be green. And that was true in this case, green, right? This is not a way to trade. Don't trade like this. because all this means was basically that price moved down and then moved up. Like, this is not a way to enter a trade. This is not an entry, right? It's just that it just shows the past price history, and because you know that price was down here at one point and now it moved this much up, you can predict that, okay, it will move up a little bit more. The same thing happened, for example, also in this candle with this wick. Price was green at this point, but then it moved down red, right? It moved down this much. If you go to the lower time frame, oh my God. You can see that before the candle closed, there was already some down movement, and that's what caused the further down movement that we see later in the 5 minute. But this is not a way to trade, because all it does is tell you what's happened, and it doesn't tell you whether liquidity has been swept or anything like that. But it is something to look out for, and it is important to realize that what these wicks mean, because the wicks do matter a lot. And when we're talking about break of structure and that kind of stuff, it's important to differentiate between a wick and the body of the candle. Alright. So this was basically... I'll say one more thing. If we have candles, like this one for example, where you can see that the body is extremely small, which means that in these 5 minutes, price barely moved. However, the wicks are pretty big. That means that price is quite unsure. And you will see the wicks like large on both sides quite often in moments where there's low volatility. Like you can see here, I have the New York session marked out. So this is when New York session begins at 3:30. This is where London session ends. The golden hours are probably somewhere here, right? But afterwards you can see that price doesn't really move, as it is unsure because there's not high volume. There's not a lot of buyers or sellers in the market. This is just classic Asian session bullshit. But the same thing happens quite often, as you can see, where we have some big move in this golden area and then just stability. Big move and more like stability, you know what I'm saying? Like, it's not 100%, but you know what I'm trying to say. Why is this here? Okay, I'm gonna end this video because it's getting hella boring and I want to move on to more interesting stuff. So next video will probably be trends. Trends are pretty simple too. It's gonna be pretty boring. I have to get these videos out though, because we have to get rid of the easy stuff so we can go to the more interesting stuff and so we can do the more fun stuff. Alright. I'm gonna go watch some Friends with my mom, so what should I call this video, by the way? You know, the first video was wakey wakey. So should I call this We Awake Now, or should I call this I feel like this is a boring video, so I'll call it something like Contemplating in Bed, because you know what, I have an idea actually. Each video would just be like a moment from your day. So first one was wakey wakey, because you gotta wake up. But this one's gonna be like boring. It's gonna be like brushing your teeth, you know. It's like we have to get through the basics first before we can go, you know, get the roast beef at lunch, or go to Berlin and, I don't know, take over, and go out at night. Like, you first have to get through the basics, the boring stuff, and then you go and do the crazy stuff. You heard? You heard? So I'll call this one, what should I call this one? This one is Learning the Basics. So what's a good name? I don't know. I feel like getting dressed is a good name. Getting dressed, because look, or dressing up. No, getting dressed, getting dressed. Because you need to have clothes on before exposing yourself to the world. And you need to know how to read a candle before you expose yourself to the market. Okay, so getting dressed is gonna be the name, so don't be surprised. And now it's time to post the video. Ciao.